We all know why Bitcoin grows over the long term, right? It's not because of its tokenomics, it's not because the supply is so low, it's because Bitcoin is pretty much a religion, right? There are people that simply just buy into Bitcoin regularly, they hold Bitcoin long term, and so the Bitcoin that gets scooped up by the diamond hands tends to grow over time, and that's why the price tends to also grow over time. And that price tends to grow faster than fiat expansion, right? The US money supply grows by roughly 7% per annum. Bitcoin is growing faster because of that adoption by the diamond hands. But there's something very interesting about those cycles, those booms and busts. But let's have a look at the long term first. So here is that long-term accumulation. At the bottom, we see the Bitcoin that hasn't moved for at least 5 years, and this tends to increase as a fraction of all of Bitcoin. So more and more Bitcoin, relatively speaking, is in the diamond hands. And that's really what's driving this long-term appreciation of Bitcoin. This is a very long-term chart starting in 2010. And so since this chart is rising all the time, all of that boom and bust cycles is generated by the short-term or medium-term holders. Now let's have a closer look at this long-term Bitcoin price chart. I have the impression the market is getting smarter over time. So this is again the long-term price chart, and we've got just a random curved line here. There's nothing mathematical about this, but it is connecting the bottoms quite nicely. And just for your reference, the bottom right now, at the current time of this recording, is at around 29,500 or so, a drop of a bit over 50%. Now what's so interesting about this chart? Now I've got the impression that the tops don't grow as quickly anymore compared to the bottoms, as in the bottoms get scooped up faster and the tops don't extend that much anymore. Or in other words, the long-term dollar cost averages, they tend to wait somewhat to buy in heavier. They buy in very heavily when the price is depressed, and they might be selling faster when the price tends to rise. In the past, that was not necessarily the case. When we look at this top over here in 2013 to the top in 2017, that went up by roughly 1,500%. When we look at the bottom of the bear market to the bottom of the next bear market, that also went up by roughly 1,500%. So no problem here. But look at what happened subsequently. From the top in 2017 to the top in 2021, we went up by 240% roughly. From the bottom of the bear market to the bottom of the next bear market, we went up by more than that, by almost 400%. One should be expecting that the bear market actually extends a bit more, since the rally wasn't that massive either. Another way to look at this is simply checking the extent of the drop. So we've got our overlay over here and move this to the top of 2021, and we have seen a turnaround a bit earlier than expected. We should have fallen by another 26% actually. So what's going on? I believe that the medium-term traders, the people that tend to ride the waves, they do become smarter. They tend to buy heavier when we are depressed. They tend to sell faster when we are high in the price. What that in turn means is that the volatility of Bitcoin should go down over time. So the bear markets should become less and less aggressive, the bull markets as well. Now I'm not sure if a bull market of just 10% or so is justified, but I would not be surprised whatsoever if we don't see price drops like in the past anymore. I do not necessarily foresee us trading down by 77% all the way to 16K. This would also break this very long-term trend. My absolute favorite way to time those cycle bottoms is to use the realized price. The realized price is the average cost basis of the market. It shows if the market in aggregate is currently in losses or in profit. If the market in aggregate is in losses, there tends to be less sell pressure, right? If you believe that Bitcoin over the long term will appreciate because of fiat expansion, etc. If you believe in Bitcoin as a savings vehicle, then you can simply just wait it out when you're currently in losses, right? So when the market in aggregate is in losses, sell pressure tends to decline. Thus, the price at some point will turn around. At least that's what happened in the past. And so here is the long-term Bitcoin price again with the realized price, so with the average cost basis of the market. And whenever the price is below that realized price, it had been a very, very good time to buy in heavily. And so the extensions below the realized price, right? Like how much we fall below that realized price also tends to shrink over time. People are getting more and more aggressive in buying in whenever the price goes below the realized price. Currently, the realized price is at 30,700. Again, that's pretty close to our support line that we drew here as well. And yes, we might fall below that again, but probably not by a lot. So the rallies become less and less exciting, but so do the bear markets. They become less and less scary as well. And so that kind of explains why Bitcoin can't really grow that much anymore. There weren't too many new people jumping into Bitcoin. There was only the existing investors that drove up the rally, that did a lot of meme coin trading as well. And the people that tend to ride the waves, the people that tend to hold over several months, potentially 1 or 2 years, they might not buy right now, right? Most of them might wait and buy when we are back at 30K. And so when they are not buying, this of course also reduces the extent to how much we can extend further and further. And so when we combine this together with the rather lackluster demand for the Bitcoin ETF, there had been rather Bitcoin ETF outflows recently, then I'd not be surprised if we actually don't see any positive price action. Maybe even until the end of the year, maybe even beyond that. How much longer could we go sideways? If we don't see a crash, if we don't see a rally, we could stay at the current levels until March of 2026. The latest point in time to see an all-time high would be September of 2026. Bitcoin isn't growing as quickly anymore, but it's also way less risky than in the past. So I do believe it's still a great portfolio diversifier. It still outperforms stocks, it still outperforms bonds and gold, etc. But of course, if you've got an asset class that already has support by Wall Street and by US presidents, etc., then it's a very different risk profile to back in like 5 years ago, where nobody knew whether or not Bitcoin will get outlawed. And so I believe since buying and holding doesn't bring us that much return anymore, it's more important than ever to ride the waves properly. Even though the extensions of those ups and downs aren't that massive anymore, if we use leverage, we can still get good returns. I'm not talking about using leverage on random meme coins. I'm talking about maybe taking out even a personal loan on Bitcoin when Bitcoin is only at 30K, right? If you buy Bitcoin at 30K and you take out a personal loan of say 1 year of your income and you pay this off over the next 6 years, I believe that the returns are still very, very high and the risk is somewhat manageable as well, if you can of course serve that debt easily. In case you've got Telegram, feel free to join us. The link is down below. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.